talking about repricing, and then he's hoping that the market will definitely moderate after a while. What's your thought on all of these playing out?
Bearish run has come to stay in the market. I mean, throughout this week now. This
it's
is
no funny joke.
No, 3 days running now. So look at, as at yesterday, MTN lost over 700 billion naira, and today again, MTN is down. Majority of the big companies, they are trading in the lower territories. If I give you the list, there are so many. Talk about Access Corporation, First Bank Group, JT, MTN, Zenith, Adova. There are so many big companies. And so you see that, as Mr. Tajuddin has said, since the MPR period,
Rate hike,
investors have reacted somehow, and it's like they bring emotion even into the pricing of securities, because it was like majority of them didn't expect it to be, hype up to 14%, and so they had wished it was possible.
It was retained at that 13%.
Yes, that they were able to, buy and sell at the old, price. But as it is now, the market is jolting many of them. And it seems that the conditions are not even controllable.
Do you think the market will continue to bleed as we're wrapping up the month of July?
Exactly, even beyond. Because the factors outside the market, you cannot control. And they don't seem to be immediate solution. Talk about the, freezing of the naira, the value, the weakness. Talk about the inflation. Look at, as at today now, there is a general strike going on within the nation. And that is a disruption of economic activities. Somebody was talking about aviation, issues, not quite long from now. So how many problems are we handling at a time? All of them, if you put in a basket, investors don't want to pick those things. They are not encouraging. So there's disincentive.
So there's nothing we can do right now to incentivize or excite the market to woo them?
I do not see anything that we can do except those who have, excess funds. Then they can take advantage of the situation because the prices are down. But people are complaining that inflation does not leave them with investable funds. Do you understand? So that's where...
An increased participation of local players is one of the trends we are trying to see
here.
That's
the paradox. So
hopefully we see the
It will take a very long time for markets to rebound.
Yes. Thank you so much for your time, and then we'll do this definitely again tomorrow.
Thank you,
Effiong Ekop.
Thank you.
And our shift in focus to the international front. Better than expected results at Microsoft and Google helped steady Neva's mood in stock markets today, while bonds and the dollar were on edge ahead of a U.S. Federal Reserve meeting that was expected to deliver another big rate hike. Nasdaq 100 futures bounced 1.5%, and the S&P 500 futures were up 0.9% in Asia after Microsoft forecast strong revenue growth, and Google parent Alphabet posted solid search engine ad sales. European futures rose 0.2%, and London's FTSE futures also rose 0.3%, and Japan's Nikkei rose 0.4%. Things are not so bright elsewhere, with MSCI's Products Index of Asia-Pacific shares outside Japan dropping 0.7%. That's the world's also second biggest chipmaker SK Hynix warned that demand is likely to also slow as customers cut spending, and shares fell by 1.9%. And looking at the state of the Australian economy, inflation spiked to a 21-year high just last quarter and is likely to accelerate even further as food and energy costs explode, stoking speculation interest rates would need to more than double to bring the outbreak under control. Today's gloomy report comes just a day before Treasurer Jim Chalmers is also due to update the previous government's budget forecast, and he's already warning that inflation would get worse before it gets better. Data from the Australian Bureau of Statistics shows that the Consumer Price Index dumped 1.8% in the June quarter, just short of market forecast of 1.9%. The annual rate picked up to 6.1% from the 5.1% the highest since 2001 and more than twice the pace of wage growth. A closely watched measure of core inflation, the trend mean, rose 1.5% in the quarter, lifting the annual pace to the highest level since the series began in 2003 at 4.9%. And wrapping up the show today, oil prices on the international market held steady as concerns about weaker demand offset industry data that show a larger than expected drawdown in U.S. crude stockpiles. U.S. West Texas Intermediate crude recorded a price increase of 0.82% to hit $95.76 per barrel. Brent crude now sells at $105.20 per barrel, registering an upward price margin of 0.57%. Bonolite's performance is, however, still in the red territory with a price drop of 3.25%, selling at $118.10 per barrel. And for the OPEC basket, crude oil dealers offer $106.30 per barrel, recorded a decline in price of 1.29%.